Hey everyone, welcome back to the Your Money Your Life podcast. We are on another episode, and it's great to have you there this week. If you're listening via DSPs, whether it's Apple, Spotify, any DSPs where you can hear it, we are thankful to have you. And if you're watching on YouTube, we're doing this, of course, on YouTube now. So thank you for the people that are tapping in via YouTube. We are appreciative of having you there. And we're also going to get better at doing the video recording. That's something that I enjoy, and we're going to keep doing it. Of course, before we get into anything, make sure you like, subscribe, 5-star rate, and review the podcast because we do this every single week for you. And we're going to get into it. Market update this week. Market update. So far in 2023, we've actually had a market that's up 3 to 4%. And a lot of that's a relief rally from what's been going on, a little bit different data when it comes to jobs. And we talked about that last week. But the big data that came out this week was, of course, the CPI, the headline consumer price index, which tells us what is going on as it pertains to the rate of inflation. And so inflation closed out 2022, and it was really a modest retreat. Consumer prices came down. They posted their biggest monthly decline since early pandemic. So if you're looking at the actual raw numbers, let's look into it. Excluding food and energy, so that's a core CPI. When you exclude that food and energy, there was a 0.3% rise, which was in line with estimates. If you look at it on an annual basis, headline CPI rose 6.5%. So annually, that's annual basis versus the monthly basis that we just went over. And core on an annual basis increased 5.7%. So we did peak and it's starting to come down. Is it coming down fast enough? Is it meeting the Fed's goals? That's kind of the big question that investors and traders are trying to wonder is what is showing enough progress for the Fed, because we're moderating, prices starting to come down when it comes to gas prices. That's been a steep decline in those prices, which is fueling some of this downward trend of inflation. So that's a big thing in the market. And right now the market's ingesting that data this morning, and we're seeing a little bit of flat trading, which is to be expected based on the fact that we had some sort of a relief rally over the last few weeks. So it's coming there, and it's good to see, and that's what we were expecting so far. So that is one side of the market. Again, we said patiently waiting in 2023 for the opportunities because they're going to start rising. You're seeing a little bit of a relief here. I don't know how long this relief rally will sustain because we are still having job losses, and that's the big thing that we needed in the sense of for inflation to slow down. That's the big thing that investors were wanting to see. And when you have job losses, you actually see the market retreat, usually, especially if there's a sustained move in the unemployment rate. So we'll be watching that pretty closely for more clues and insight on the market itself. Now, if we move into kind of current events and news, what's been going on? I actually ran across an interesting story. So JP Morgan, we obviously know the big investment bank and big consumer and commercial bank. They shuttered a website that they paid 175 million for, and they accused the founders of inventing millions of accounts. So JP Morgan on Thursday, they shut down this website for college financial aid platform. It was bought for 175 million, but they are alleging the company's founder created nearly 4 million fake customer accounts and sold it to JP Morgan under the pretense of the fake 4 million customers on the platform. And JP Morgan said it learned about Frank after sending out marketing emails to a batch. It learned about the truth about Frank, meaning it learned that they didn't have all those customers. After they sent out an email, they bought the company, then they sent out an email blast to 400,000 customers, and about 70% of those emails bounced back. And so they're like, all right, so 70% are bouncing back. What is going on here? These aren't real people. These are fake customers. So they've sued, and they sued the founder and also the founder's right-hand person. So the founder is this woman named Charlie Javis, and she used a data scientist to allegedly invent millions of fake accounts. And this is allegedly according to JP Morgan. And a lawyer for Javis told the Wall Street Journal that JP Morgan manufactured reasons to fire her and to avoid paying her millions of dollars that she owes. I thought this is an interesting story. And it always goes back to what was going on in 2021, which is a FOMO and a craze to buy anything and everything that was being offered. I was telling my girlfriend just about how crazy it was. These when it comes to venture investing and all that was going on, you had kids that were fresh out of college that didn't know anything, raising millions of dollars and claiming they had term sheets. And I talked to some of these people that were sitting in, beanies and just didn't look like they were ready to run a multi-million dollar operation, and people were just throwing money around because of the FOMO for what was going on in 2021, and all those chickens are coming to roost. So she really claimed this Frank company had grown really fast, and she claimed she had 4 million users when previously she'd said she only had 300,000. And so she, it looks like allegedly she had a data scientist that they have a trail that she paid someone $18,000 to create some more fake customers. And she was obviously, the acquisition went through, and then she was hired on by JP Morgan, and she was working with them as the head of student something. And then they actually fired her in November and fired the right-hand person in October. And again, JP Morgan is alleging she lied about the startup scale, and she wanted to cash in under false pretenses. So this is an interesting story, and again, just a recall back to 2021 and why it was such a crazy, crazy time in my estimation, because people were it was just a crazy FOMO period, just crazy. So we'll be watching that story. I think that's quite an interesting story. Moving on to other news. So HBO actually did a Game of Thrones NFT that sold out even during this crypto winter. So HBO they launched a Game of Thrones non-fungible token on Nifty's digital marketplace. The 5K Hero Box NFTs minted on Ethereum and Palm. They contain Game of Thrones characters like White Walkers and Free Folk. They were, I guess, mocked for poor design. I'm actually curious what the design looks like. But yeah, I guess it's showing that cult fan bases still want a piece of these NFTs. You saw other people do a tennis star. The Australian Open is going to sell 2K tennis themed NFTs. Politicians are just jumping back in. So never was huge on the NFTs, especially ones that aren't highly valued or have a collectible value that's widely attractive to other people, rather than just something that you want and may not have any resale value. That's the big thing, is resale value. The value is going to rise to the top on all these things. We've talked about it. And some of the top ones have held some decent value relative to what else is going on. But that's, again, something that we've discussed that should just be careful on. Bad Bath and Beyond they battled the retailers, said they're going to lay off people. The stock surged. They said they might go to bankruptcy. There's just embattlement going on over there. We see it more and more. There was more companies that did it. Coinbase, they were going to the layoff section of the podcast. Coinbase said they're going to lay off 20%. And that's, I think, their second or third round of layoffs. And Brian Armstrong, CEO of Coinbase, called it unscrupulous, out the unscrupulous actors in crypto, saying that they're at fault for this, pretty much calling out SBF and others that have, committed allegedly fraud and different acts that have brought on this crypto winter pretty much. And so he's making a cut to employees. They shed 1K employees in June and 60 in November. So yeah, this is the third round of their tightening of the balance sheet as they look to firm up the bottom line. So more on that could be coming down the pipeline. Folks, what are you guys doing? Is it work from home for you? Is it work at work? It looks like Disney CEO Bob Iger is cracking down on work from home, telling workers they have to be in the office 4 days a week. So hybrid work is here to stay, but occupancy is still well below peak pre-pandemic levels. So some people are switching their mind. I know Salesforce is 4 to 5 days a week. Google's flexible. I think you can pretty much work from home if you want, whenever you want. You can go in like maybe one night a week, or if you want to, 1 day a week. So it's different strokes for different folks, but yeah, it's quite interesting to see. Lululemon is back in the news. They're doing markdowns and mirrors weighing on their profit. So Mirror is a company like a fitness mirror, literally a mirror, but it's a fitness kind of portal that they bought. I think it was in 2021, of course. But they're discounting the home fitness startup Mirror they bought for a cool 500 million. That was their first acquisition. They're saying that it's dragging down profits, and there's less anticipation, there's less adoption that they anticipated for the Mirror fitness platform. We're discounting their leggings. So it's really hitting really hitting profits right now for Lululemon. The share sank 9%. They said that margins would shrink from its holiday quarter. And so the guidance they gave wasn't as positive as many. And so that's something to watch out for here with Lululemon in the future. So much going on in the news here today, folks. So we're going to get to financial questions of the week. And there's a lot we can go over. Let's see. Personal finance questions for us today. What do we have for us today to go over in detail and really, really see what we can knock out? Well, this is a good question. I like this question a lot. So the question is, what is the deadline for filing your 2020 tax return? What is the deadline for filing your 2020 tax return, folks? And most will know this answer. It usually falls, I'm actually looking at the calendar. It usually falls on April 15th, but that is a weekend. So it's April 18th of 2023 this year. It's typically on a weekend, excuse me, typically April 15th, but the deadline falls on a weekend this year. So it's April 18th. That's also the last time to make contributions to your IRAs for 2022. And of course, you can file a tax extension deadline. A tax extension, that's the deadline to file an extension. And that gives you till October 15th, if I'm not mistaken, as well. So extension gives you an opportunity to file later, but you have to file that as soon as you can. But the deadline is going to be April 18th this year versus April 15th because it falls on a weekend this year. All right, folks. What is the average value of an unused gift card per person? That's an interesting and funny question. Many people probably got gift cards. I know I got a good amount this year for Christmas, Starbucks, Amazon, whatnot. What is the average value of unused gift cards? What is the average value of unused cards? Think about it before you answer. Think about it before you answer, folks. Make sure you've thought about it, and we'll get to the answer. So the answer happens to be $175 per person, up from $116 last year. So people are leaving more money on the table than they did last year. $175 per person is an amount of unused gift cards. That's crazy. I love gift cards. So percentage that have unused gift cards, Gen Z is 51% of it. Millennials are 52, and Gen X, 42 years old to 57 years old, is 43%, and boomers come in at 42. So boomers are really going to use that. You give a boomer a gift card, they're going to make sure they use that. What's going on with millennials? They're the highest percentage that have unused and the highest value of 226. Millennials are just leaving money on the table. Of course, most millennials at 26 to 41. Wow, they're leaving money on the table, folks. Never a good thing. Never a good thing to leave the dollars on the table. So, folks, this has been another fun, exciting episode. I'm loving doing it on YouTube. Remember, you can tap in on YouTube, Delano Saporu. That's where we have the video up, the full length episode. Of course, if you're listening anywhere else, make sure you stay tapped in on Apple, Spotify, podcasts, and share this with your family and friends because we do this every week and we love doing it. Guess what? We'll talk to you next week.